Okay, we are live. So, let me make sure I keep my chat close by. All right, so today, big move, stimulus in China. Excuse me. Cutting reserve requirements for banks, reducing margin requirements for stocks, and cutting interest rates. That's what I believe I read. If we look, this is FXI on the monthly. Loading slow here. I'm going to switch to a daily, but so far for the month, 15%. It's just loading up my settings. Okay, so let's get rid of these drawings. FXI for the month, look at that bar. And that's what I want to talk about. 9.83%. That is the large cap ETF. Let me just look at HSI. This is in China. That's 4%. But it's even bigger because I think the dollar move, you can see by DXY. What was the dollar move? 0.5%. And that levered up the move. This is Chinese yuan, 0.25%. But either way, big move. Some of the stocks I want to look at are BIDU, IQ, and BABA. So this is a BIDU. And from the short-term bottom, we'll just say roughly 81 to where it's at now, 16% move. You could make, that could be your year. BABA was a BIDU was a $350 stock at one point. And it's, if you look before, other times there was stimulus or other times when there was a short-term bottom that became a medium to long-term bottom, the stocks go above their 200-day moving average, all their moving averages, and then extend. So if we call this a bottom, it went up over the moving averages. This time went higher. What is this? 2022, late 2022, same thing, to the moving averages and some, but then fizzled out. So it's hard to say what will happen this time around if this is a bottom with follow through. But I would expect something above the moving averages. 100 to 120, maybe. And it's cheap. If we look at every time it's bottomed before, let's say price to sales. It bottomed under 2 times sales, under 1.5 times sales, and close to 1.5 times sales. So on a price to sales basis, this is consistent with being cheap. PE wise, it's attractive. Price to cash flow, attractive. Let me just look real quick at Seeking Alpha. I'm not going to log in here, but Something interesting about seeking alpha is they will show you not only the earnings, not stellar growth expected, but it's a 7 PE, 786 PE, and it should be a 7 PE. Said another way, this is like almost $100 stock and it makes 11 bucks. That's 11% earnings yield, and that's supposed to go to 12. So attractive. A lot of the stocks we know, Apple, Google, all these really expensive stocks, they're showing 3, 4, 5 earnings yield when you're getting more than 11 on BIDU. Not only that, if we look at the capital structure, the market cap is 31 billion now after the rise. They have almost 21 billion in cash. So that makes the stock a little cheaper when you factor in the cash and the debt. 24 billion enterprise value. Let me zoom in. So you can't always get that in a stock, but you have to pay attention to that. Is this company producing cash? Yes, it is. Could they pay a dividend in the future? Yes, they could. So I have a trade on in BIDU, and I'm using calls. And what I'm gonna end up doing is whatever this yields, whatever this stock, however high this goes, I want to end up with some free stock. So buy calls, they pop, and then get out of the calls, turn it into free stock, less leverage. Same thing here, buy calls, it's moving. Let's say it goes up, who knows to what. Take your gains, keep some stock, and then wait. Because there could be good things coming. Let me get rid of all this. Let's go to a monthly chart. We don't need those lines. So BIDU's been in this price range for more than a decade. And they're investing in robo-taxis. Let me get rid of the log. They're investing in robo-taxis, AI, and they're known as the Google of China. So I don't know how good it could get, but I know that as long as there's nothing bad war-wise, this company should be more valuable in 10, 20 years. And this is a very cheap entry. This yellow line you see there is a tangible book value, and it's still below that tangible book value. So it's another way to say that it's cheap. All right, so make sure there's nothing going on over here. Another one I want to look at, so IQ is known as the Netflix of China. It really isn't, because there is competition. But since we covered BIDU, guess who owns roughly 45% of IQ? BIDU. So if you buy a BIDU, you get some of this automatically. IQ stock is already up low to high recently, 23%, huge. That's a great year already. Price to sales under 50 cents per dollar in revenue. Price to earnings 10, and it's growing. So it's a 10, roughly a 10 earnings yield. Price to cash flow 4. This one this is my second round trading IQ. I traded this rally from 3, 4 to 5. Got out, was surprised to see it drop, and now I get to do it again. They had a bad quarter in Q2. At least not, it should have grown more, but it didn't. But it's usually a bad quarter for them. Winter seems to be better. Let's go to Seeking Alpha, punch in IQ. PE here, forward PE is 8, so it's even cheaper on a forward basis. Let's look at the earnings. They're expecting 24 cents for this year, 2024, which is at 8.76. If you factor in next year, now these were adjusted down. They were higher before, like 40 something for 2025. Now with these lower earnings expectations, it's still a 5.9 PE at the current price. And it's growing 48%, 27%. Huge numbers. That's what they're expecting. So that's why I'm interested. I'm interested in the growth over time. This one isn't as cheap when you look at the balance sheet. It's $2 billion for the market cap, but the enterprise value, because of their debt, is higher. So if you bought the whole thing, you would have to cover the debt, is what they're saying. So it's $3.3 billion. Still, what could it be worth in the future? I think when I looked at the earnings, when I log in, they're expecting 2029, they could earn $1 per share. What would you pay for a company earning $1 per share? 10 times? 20 times? That's the question. So same thing with IQ as BIDU. I'm long stock, long calls. Whatever happens with the stock as it moves, I want to end up with free stock. Take some profits, end up with free stock, and then own it for a while. Who knows? In the next 5 to 10 years, it could be a $20 stock. But there's always geopolitical risk. We don't want war. We don't want anything like that. We don't want to see delisting, like what happened with the Russian stocks. That is IQ. BABA, a lot of people really like BABA because because of what's going on with potential tariffs. What if Trump gets in? Even though that's looking less and less likely. Would BABA have enough oomph since it's e-commerce? 10 times cash flow, 25 PE, not so cheap. Price to sales, attractive. Let me look at I know Charlie Munger loved BABA. Forward PE 10, that's pretty good. $97 stock, and they're going to earn $8.88. Growth is not so big, but still, if you get a good yield and the yield gets better, that's a good business. It's like a cash flowing property. 61 billion in cash, 33 in debt. So it's nice to see that they have so much cash. It only brings their enterprise value from 209 billion, so it's huge, down to 197 billion. So it's not as exciting from a potential growth profile. It's a good value, but what is the upside? Maybe a double? Maybe a triple over 5 years? Yeah, maybe eventually it goes up back up to the highest, which is around 300. I'm surprised that's all the history it's had. 97 maybe goes back to 3 or 300. Let me look at the KWEB. Wow, Baba looks exactly like the KWEB. They look similar, right? Who knows where this goes? Maybe 50, maybe more. I don't know how strong bullish the economy is for China. I know there's a real estate drop off. I know there's a lot of deflation, but some of these stocks, if you look at the charts, you're not going to see a big bullish trend. All you see is consolidation with a potential breakout. Like, let me go back to BIDU. You wouldn't buy the chart if you didn't know the company. That I definitely would say, because look how strong the S&P is, and look how not strong Chinese internet ETF is. Lee, also I'm interested in this one. Lee, valuation super cheap. Geely, GLYF, also attractive. Wow, it's up 14%. I wish I grabbed this one. I didn't. I think they'll have a harder time, but it's just very attractive valuation. They were almost at book value, so who knows? Maybe they'll bounce around. But if you can buy a stock at book value or cheaper, you're in the right neighborhood. I think I'm going to leave it there. If you like some of these stocks or have some other stocks you're looking at, please comment, and I'll probably do a few of these throughout the week.